Hello guys, in this video I would be discussing management accounting question paper which was asked in June 22 examination. So it is a part 2 part, that is with respect to management accounting. This is a complete paper which includes both corporate and management accounting. We will straight away get into part 2, which is from 61st question. Because the first 60 questions will be with respect to corporate accounting. We will straight away go to management accounting part. Yeah, part 2 is with respect to management accounting. So we'll discuss all the 40 questions one by one. Dash is a process to ensure that appropriate action is taken if cost exceed a preset allowance or predetermined allowance, or actions to be taken if costs are expected to exceed the expected levels. What is that action? We call it as cost control, guys. We call it as what? Cost control. Theory question. Next, primary packing material is an example of what? It is always direct material. It is a part of first chapter. Whatever questions we are discussing is a part of first chapter, where it is given clearly. I have given the examples for direct material. So one of the example for direct material is what? Primary packing material. Okay, sir. Next, which of the following is the purpose of time recording? So time recording comes under labor part in the chapter 1 only. So time recording includes two parts, time keeping and time booking. So the answer here is time keeping and time booking. Time keeping is actually recording of the time the employees are working in an organization. That is what time they come, what time they leave. Whereas time booking is how much time is taken to complete each job or each work or each process. Clear? Yes, sir. Both is a part of time recording. Next, coming to second chapter question, that is companies cost records and audit rules 2014 came into force on from what date? From what date it came into force, or with effect from, we call it as, it is 30th June 2014, guys. 2014. The answers I have just highlighted here also, so you can just observe that. The next one is 65th question. Which of the following is the social purpose of cost audit? So the main purpose of cost audit is to express the opinion. The cost auditor appointed by the company, they will be expressing the opinion on the cost records of the company. But in addition to that, there is something called as general purpose and social purpose. Clear? Social purpose means from cost audit, what is the useful or what is the benefit to the society or outside the organization. So what are the options? We will just go through. Inculcation of cost consciousness, then determination of inventory value, promoting corporate governance. So all this will be a part of your general purpose. Whereas the social purpose is given, what is it? Improvement in productivity of human. When the productivity of human beings is improved, it is not only helpful for the organization, but also for the social purpose. Then physical as well as the financial resources of the enterprise. Yes, sir. Then coming to 66th question. See, and in the institute study material, they have clearly given what are the examples for like social purpose, general purpose and all. If you guys are like, okay, just go through it once. Just go through it once. Okay, guys. Chalo. Then coming to 66. Which of the following is the general information attached with the annexure to cost audit report? So the cost audit report will be prepared by the cost auditor. A copy of annexure will be attached to it. And what is it? It is actually cost accounting policy. That is what cost accounting policy the organization has followed to maintain their cost records. Yes, sir. Next, which of the following form is used for filing cost audit report with central government? Actually, the cost auditor, whoever is appointed, he will submit the cost audit report to the board of director. In what form? CRA 3. And once the board of director receives this, he has to give his comment and he has to pass on the copy of this report to whom? Central government. Central government. In what form? CRA 4. Clearly they have asked which of the following form is used for filing cost audit report with central government. So this is like company filing with the central government. So your answer should be CRA 4. Whereas the auditor will submit it to the board of director in CRA 3. Please be careful what they have asked and accordingly answer it, guys. Okay, sir. Next, with respect to budget chapter, whatever questions we discussed till now was from chapter 1 and 2. Next, 68. Dash is a budget which can be attained under standard conditions. So there is a budget called basic budget, which is normally not changed over a long period, and it can be attained only under the standard condition. So what is that budget called, guys? Basic budget. Okay. Next, going to 69th question. If the activity ratio and efficiency ratio of a factory are 80 and 66.67% respectively, then capacity ratio will be, what is it? See, we know that the equation for activity ratio is capacity ratio into capacity ratio, let me write, into efficiency ratio. Yes, sir. Activity ratio, have they given it? Yes, 80%. Then capacity ratio, have they given it? No. Let us keep it as capacity ratio. Then efficiency ratio, they have given it as 66.67. So cross multiply. Capacity ratio is equal to 80 by 66.67. So let me just do 80 by 66.67. You will get what? 0.11 into 100 you have to do. That is, we have to calculate in percentage. Na? Just a second. 80 divided by 66.67 into 100. So you will get what? 119.99, means into 100 when I do. 119.99 you will get. So they have just given the answer in the round of 120. What should be the answer? 120. Okay, they are just rounded off. Actually, when we calculate, we get what? 119.99, which we have to round it off for 120%. Okay, sir. Next, let us go to 70th question. The following information is estimated for the year 2022. Normal loss in the production will be 5% of input. Okay, normal loss is something which is uncontrollable. It is 5% of the input. Sales in units as per the sales budget is 76,700 units. Closing stock will be 13,200 units, which has been estimated 10% more than previous year's quantity. Okay, previous year quantity means last year closing stock will become this year opening stock. Yes. So last year closing stock, whatever is there, this year closing stock is 10% more than that. 10% more than that. Please be careful. Last year or previous year stock is nothing but last year closing stock. So last year closing stock will become what? This year opening stock. You should be knowing it. The input for the required production will be, what they are asking is the input for required production. Interesting question. Let us do it. First, we should know the equation, guys. What is the equation actually? Production plus opening stock minus closing stock is equal to my sales. But now we have to reverse this equation because we need to find out what is production. Okay. Sales minus opening stock plus closing stock I have to do. What do I get? Production. And next our challenge is how much raw material is required for this production we have to find out. First step is how many units are produced, you calculate. That is output. This is with respect to what? Output. Okay. Once we calculate this, okay, to produce this much output, how much raw material is required, we will calculate after considering 5% loss. Okay, sir. Sales, they have given it how many units? 76,700. 76,700. So this is the sales we have made. Opening stock is not given. We have to calculate it. How is it? Simple, guys. Closing stock, they have given it. How much? 13,200. 13,200 is given, which is 10% more than last year's stock. So can I tell this is 110 into 100? Can I do like this? Yes, sir. Because this year closing stock is 13,200, which is 10% more than last year. So can I tell last year closing stock, whatever is there, is this much. Like, however, we will get it. That is 13,200 divided by 110 into 100. It is 12,000. This actually is opening stock now for us. Okay, this was last year closing stock, which becomes this year opening stock. Hope you guys are clear. Okay, you can just cross check also. For example, if you do 12,000 plus 10%, 12,000 was last year's stock plus 10%. If you do, how much you will get? 13,200. So this is what? Closing stock. So this is closing stock. This is opening stock. Is it matching? Yes, sir. You can just cross check like this also. So what we have calculated is actually opening stock. Okay. So opening stock is 12,000 units. Why are we deducting it? Because this is not produced in the current year. It was produced last year but not sold. So when we are calculating how many units are produced in this year, that is 2022, what we have to reduce? Deduct opening stock plus closing stock. What is closing stock? Sir, I have produced this year but not sold. So have I produced it? Yes, 13,200. 13,200. Hope you guys understood. Means why we are adding, why we are deducting, you should be knowing it. I repeat once again. Opening stock is the units which I have produced last year but not sold. So in this year, have I produced it? No. So, but when it comes to sales, whatever I had produced last year, obviously I will sell that first, following FIFO basis. Agree? So 12,000 is a part of my 76,700, which is sold, but it is not produced in the current year. That is why we are deducting. Whereas coming to 13,200, it is a closing stock. So following FIFO basis, these units are produced when? In the current year, but not sold. So is this 13,000 a part of 76,700? No. Why? Because it is not sold. Nah? Yes. So 13,200 is the units produced, but not sold in 2022. So how many units you have produced in 2022? 17,700 plus 13,200 minus 12,000. It is 77,900. 77,900. How many units are produced, guys? 77,900. But produced, what is the good units? Means you have produced how many good units? 77,900. But for this, how much raw material is required? There is 5% input which is lost due to loss. So can I tell how much raw material is required? Means 77,900, which is 95%. Because 5% is lost now. So how many good units you produced is 95% of your input. If your input is 100 units, then how many good units you produced? 95 good units. So how many good units I have produced in 2022? 77,900. So how much raw material is required to produce so much? Divide it by 95%. How did you get 95%? 100% minus 5% loss. 5% loss. Okay. So divide it by 95%. You will get how much? 82,000. So 82,000 is what? Raw material, not output. So to produce 77,900 good units, how much raw material you require? 82,000. Sir, why 82,000? Because 5% will be lost in the process. 5% will be lost in the process, which will not give me the good output. Hope it is clear for you. So what is the answer here? 82,000. If by chance, if they ask you how many units are produced, your answer should be 77,900. Please be careful. What they have asked is how many input is required to produce production. Please be careful, guys. Accordingly, answer whatever they have asked for. Okay. Next question. 71st. Which of the following would be found in cash budget? So cash budget means what? It records only cash receipt and cash payment. Yes, sir. So if anything I have incurred but not paid, will I record it? No. Anything if I have earned but not received, will I record it? No. Because cash budget is always prepared on cash basis. So what are the items covered here? You can see accrued expenditure, outstanding expenditure. Will it come in cash budget? No. You may record it in P&L account, but not in cash budget, because in cash budget, what comes in, what goes out, only we will record that, including revenue as well as capital items. In cash budget, both capital and revenue items will be recorded. Similar to your cash account, or you would have learned something called as receipts and payments account in case of non-profit organization. Very similar to that. So what is the answer here? Capital expenditure. That is, cash budget records both revenue expenditure as well as capital expenditure. Okay. Next, 72nd question, bit lengthy. Let us see. The budgeted sales for the next 4 months are, okay, 96,000, 144, 144, 1,68,000. This is the sales for next 4 months respectively. it is estimated that sales will be paid for as follows, means how the sales will be paid or collected. It is like that. 75% of the sales will be paid in the month in which sales were made. So whatever sales you make in particular month, for example, let me just take a random number, Jan. Whatever sales you make in Jan, what you do? 75% you collect in Jan only. You collect it in Jan only. Okay, sir. Then of the balance, how much is balance, guys? 25%. Agree na? Because 75% you collect in Jan only, means how much is remaining? 25%. Okay. Of the balance, 50% will be paid in the month after the sales was made. So that means, can I tell? 50% of what? 25%. 20%, or else I can call 12.5% of total. Please be careful. The remaining amount we have to take 25%. In that 50% will be paid in the next month. When is it? February. Okay. Next. The remaining 50% will be paid in the month after this. So remaining 50% in 25% will be paid where? March. That is next month. So whenever you make sales, immediately in that month only you will collect 75%. Of the remaining amount, 50% will be collected in next month. Remaining 50% you will collect it in the last month. That is in the third month. Please be careful, guys. Don't straight away take 75%, 50%, 50% of the sales. Because you can see 50 plus 50 plus 75, it will be 175. That is not the correct answer. So this 50-50 is a part of 25%. Okay, so if you are taking it of total, if you are taking it of total, then it will be 12.5%, 12.5%. Clear? Yes, sir. Chalo. So how they are collecting the sales they have given? The amount of cash received in third month will be. In the third month will be. So how is the pattern given? Let me just record like this. Just a second. Let me erase this. I will record it here only. Interesting question actually. So how many months sales they are given? 1, 2, 3 and 4. So it is 96,144. They are not given the month name, so I am just recording it as 1,234 and 1,68,000. Yeah. So this is the sales for 1, 2, 3, 4 months. Okay. Now what they have asked is for third month, guys. Come on. For third month, whatever we are making sale in the third month, same thing we will collect straight away 75%. 75%. So 1,44,000 into 75%. 1,08,000. Okay, sir. Then whatever sale we are making in first month, that is this month, what we will do? 75% we will collect in first month. Okay, remaining is how much? 25%. Out of that 25%, 50% will be collected in second month. Remaining 50% will be collected in third month. So out of the sales made in first month, how much we will be collecting in third month? 25%. In that 25%, 50%. Or else straight away you can take 12.5% also. So 96,000 into 25% will be remaining. In that 50%, it is 12,000. Okay. Next, coming to second month, also same story. 75% will be collected in second month only. Out of the remaining 25%, 50% will be collected in third month. Another remaining 50% will be collected in fourth month. We are not bothered about how much is collected in fourth month. We require how much is collected in third month. So again, into 25% into 50%. Out of the remaining 25%, 50% is collected in second month. So for second month sale, second month will be what? Third month. Agree na? Hope you understood. So I will repeat again. Out of 1,44,000 sales made in second month, 75% will be collected in second month only. Okay. How much is remaining? 25%. Out of that 25%, 50% will be collected in third month. Remaining 50% will be collected in fourth month. So how much is this figure? 144 into 25% is equal into 50%, 18,000. So the total, let us total up all these three. How much you get? 18 plus 12, 30 plus 1,08,000. It is 1,38,000. So totally how much money is collected in this third month, guys? 1,38,000. 1,38,000. Clear? This is not from the sales of third month only. Whatever sales we have made in third month, 75% is collected. Then with respect to first and second month, out of the remaining 25%, 50% is collected. So 138 is the answer. Interesting question actually. Agree? Yes, 72. Let us go to the next question. The ideal norm preferred by banks for current ratio is, see, the ideal current ratio is actually 2:1, but preferred by bank is 1.33:1. Preferred by bank, please be careful. If they ask it just ideal ratio, ideal current ratio, then your answer will be 2:1. But they have not asked, they have asked what is preferred by banks. Please be careful. Okay, sir. Then coming to 74th question. If gross profit is 1/4 of cost, sales is 4 lakh and indirect expenses are 24,000. What will be the net profit ratio? So for this, you should know the equation. It is like this: sales minus COGS is equal to gross profit minus all indirect expenses will give you net profit. Okay. Now what they have given is gross profit ratio on cost. They have given it on cost, but let us convert it on sales because they have given sales figure but not cost figure. So how is it? Simple. Cost plus profit is equal to sales we will take. So they have given profit percentage on cost. So let us assume that cost is 100. So profit is how much? 1/4 of cost. So 1/4 of cost means how much? 25. Yeah. How is that? 100 into 1/4. Hope it is clear for you. So how much will be sales? 125. So can I calculate profit percentage on sales? That is gross profit percentage on sales. How much it will be? 25 by 125 into 100. So it is 20%. It is 20%. So profit percentage on sales is how much? 20%. Okay, sir. Now, how much gross profit you are getting? Sales is 4 lakh. Sales is 4 lakh into 20%, 80,000. So I got gross profit 80,000. Okay, indirect expenses is given in the question. How much is that? 24,000. 24,000. Deduct it. So what is the net profit? It is 56,000. So have they asked the amount or percentage? Percentage. So net profit percentage, how is it? And whenever they just ask profit percentage, it's always on sales, guys. Please be careful, not on cost. If they give it in the question on cost specifically, we will consider it. But whenever they just ask gross profit percentage or net profit percentage, you should always calculate it on sales. So net profit amount is 56,000. Sales is 4 lakh into 100. Into 100. So divided by 4 lakh into 100. How much is it? 14%. So net profit percentage is 14%. And whenever they ask net profit percentage, please be careful. It is understood that it is on sales, guys. Yeah, even if they ask just gross profit percentage, it is understood always on sales. But here they have clearly given 1/4 of cost. Accordingly, we have worked out. Clear? Yes. Some of these questions are interesting actually, like calculations part. Next question, 75th. The following information is given. Current ratio is 3. Acid test ratio, which is nothing but liquid ratio or quick ratio, 1.8. Current liability is 20 lakh. What is the value of inventory? Okay, let us do it. Let me do it here only. Current ratio is equal to current asset by current liability, which is equal to 3. So can I tell current asset is equal to 3 times of current liability? Yes, sir. And they have given how much is current liabilities? 20 lakh. So calculate it. So current asset is equal to 3 times of 20 lakh. So how much is current assets? 60 lakh. Current asset is 60 lakh. Okay. Next, what else they have given? Acid test ratio. Acid test ratio, it is nothing but quick ratio. I can also write it as quick ratio. So what is the formula? Quick asset by current liabilities. Quick asset by current liabilities. Okay, what is the ratio? 1 is 1.8. Okay, quick asset, let me keep it as like that only. Current liabilities is 20 lakh is equal to 1.8. So multiply 20 lakh into 1.8. So quick assets you are getting how much? 36 lakh. 36 lakh. Now what is quick asset? Quick asset is equal to current asset minus inventory, guys. Minus inventory or stock. If nothing is mentioned in about prepaid expenses, it is always assumed to be 0. Okay. How much is current asset? 60 lakh. How much is quick asset? 36 lakh. So inventory, keep it as I only. So I is equal to what? 60 minus 36. So 60 minus 36 is equal to 24 lakh. So how much is your inventory or stock? 24 lakh. Yeah. Here also you can straight away use it. Means instead of quick asset, you can use current asset minus inventory. In this equation only, you will get I as balancing figure there. Yeah. Or else calculate quick asset separately and then do the calculation like this. Clear, guys? So inventory is how much? 24 lakh. 24 lakh. Next. 76th. Dash examines the policy of the company regarding dividend and retained earnings. So which ratio will decide how much we are retaining, how much we are paying. Okay. So earnings available to equity shareholders. EA, earnings available to equity shareholders. Out of this, how much dividend we pay, how much we retain. Depends on what? Dividend payout ratio. Dividend payout ratio will tell, okay, out of your earnings, how much is paid as dividend. Remaining is what? Retention. Retained earnings. Yeah. So which is that ratio which will decide how much you have paid as dividend and how much you have retained? It is dividend payout ratio. For example, if dividend payout ratio is 60%, how much is retention ratio? 40%. Sir, what if dividend payout ratio is 80%? 20% is retention ratio. Clear? So from dividend payout ratio, we can easily tell how much is retained, how much is paid as dividend. Next, 77th. Interest coverage ratio is 7. It indicates what? What is the formula for interest coverage ratio, guys? Interest coverage ratio is equal to EBIT by interest. EBIT by interest, which tells how much times your EBIT when compared to interest. Means how much is your EBIT when compared to interest. Clear? What is EBIT? This is the earnings which is available before payment of interest and tax. Agree? So how much profit the company has before paying the interest. That is what is told in interest coverage ratio. So if it is 7, then what does it means? EBIT is 7 times of interest. So if this is 7, it is understood that my EBIT is 7 times of interest. Okay, for example, if I just randomly take the number 70,000 by 10,000. So can I tell my EBIT is 7 times of my interest? Yes. That is, if you do 70 by 10, what do you get? 7, which is equal to 7. Okay, sure. Next question. Which of the following is not included in the activity ratio? Okay, so activity ratio is one of the classification. Under that, various ratios will come like stock, debtor, creditors, everything. So which of the ratio will not come? So proprietary ratio actually will not come, but sir, we will check whether others comes. Debtor turnover, yes, it will come. Then sales to capital employed ratio, yes, it will come. You can just check it in my ratio, my notes also. Okay, it is good if you guys are keeping my notes also side by side so that you can just analyze what we are doing. Then working capital ratio, all these are part of activity ratio except proprietary ratio. Except what? Proprietary ratio. Okay, let us go to the next question. 79th. Which of the following set of reports is classified according to their contents? So as per the content, the classification is what? production report, sales report, cost report, and finance report, guys. So based on the contents, the reports are classified into what? Production, sales, cost, and finance report. This is management information system or reporting chapter. Okay, next. Which of the following is not an advantage of effective management reporting system? Means they're asking what is not an advantage. So improves decision making? Yes. Improves efficiency of resources? Yes. Improves responsiveness to the issues? Yes. Yeah. So in our notes, advantages or uses of the management reporting system we have discussed, which is nothing but advantages. Yes. So is it economical? No. Why? Because it includes extra work, extra people, extra cost. So it is actually not economical. This is not an advantage of management reporting system. Okay. Chalo. Let us go to 81st question. Selling price of a product is 40 rupees per unit. Variable cost ratio is 50%. So can I tell PV ratio is 50%? Yes, sir. Okay, let us just write it. We may require it. Because variable cost is 50 means remaining is PV ratio. Fixed cost is 1,20,000. Okay. And the units sold are 10,000. That is the total sales. What is margin of safety in percentage? So they're asking margin of safety in percentage, for which you require break-even sales. You require break-even sales because total sales is given. So once I calculate break-even sales, total sales minus break-even sales will be my margin of safety. So you know how much is contribution per unit here? Contribution per unit would be 40 into rupees 50%. Rupees 20. As variable cost is 50%, remaining 50% is contribution only, which is nothing but PV ratio. Okay. Now what is the formula for break-even sales, guys? We are calculating it in units. Fixed cost divided by contribution per unit. Fixed cost is 1,20,000. Contribution per unit is rupees 20. So 1,20,000 divided by 20. It is 6,000 units. 6,000 units. Okay, break-even sales in units is 6,000 units. We know that margin of safety is equal to total sales minus break-even sales. Total sales is 10,000 units. Break-even sales is 4,000 units. Sorry, 6,000 units. So how much is your margin of safety? 4,000 units. How many units? 4,000 units, guys. Oh, they have asked it as percentage. So calculate it. Margin of safety as percentage. MOS in percentage, which is nothing but MOS in units, total sales in units into 100. MOS in units is 4,000. Total sales is 10,000 into 100. How much you get? 40%. 40%. If they ask it in units, the answer is 4,000 units. They have asked it in percentage, guys. 40%. Okay, let us move ahead. Which of the following is a method of transfer pricing considered when the supplier division is a monopoly producer? If the supplier division is a monopoly, this is a question on transfer pricing. If the supplier division is a monopoly producer, or if the receiver is a monopoly consumer, then actually the transfer price will be decided by whom? Central management. It will be decided by central management. And how they decide it? Based on opportunity cost. How the central management will decide the transfer price? Based on opportunity cost. So the answer here is opportunity cost. Okay. Next. 83rd. If break-even sales is 60% of current sales. Okay. We don't know what is current sales. And profit is 4,000, then what is the amount of contribution? Okay, they have given profit, they have given break-even sales. And what is the amount of contribution they are asking? Okay, so if break-even sales is 60%, can I tell margin of safety is 40%, guys? Because total sales minus break-even sales is my margin of safety, na? Yes, sir. Is how much? 40%. Okay, and one more thing you should be knowing. For margin of safety, contribution is equal to profit. Yes, for margin of safety part. Okay, sir. And we have a formula, that is profit is equal to margin of safety into PV ratio. Into PV ratio. Agree, na? So for profit is equal to what? Margin of safety is into PV ratio. Okay, sir. So just 1 second, I will just go through. Then what is the amount of contribution they have asked? Yes. So what is the amount of profit? 4,000. Okay. Then what is the amount of contribution? Okay. So here PV ratio is nothing but contribution, means in percentage. PV ratio is actually in percentage. But contribution, what they are asking is in amount. Okay. We know that profit is 4,000. Margin of safety in percentage we know. Actually this formula we will calculate in rupees. Okay. Profit in rupees and margin of safety in rupees. Okay. But still, margin of safety we know it in percentage. How much it is? 40%. PV ratio we don't know. PV ratio we don't know, but as we are taking margin of safety in percentage, even contribution also will be in rupees. Okay, what will be the answer now? Contribution, which is nothing but PV ratio or amount of contribution, 4,000 by 40%. 4,000 by 40%. How much is that? 10,000. Contribution is 10,000, and this is the total contribution, not the contribution only for margin of safety part. This is the total contribution. Clear? If you ask me, sir, what is the contribution for margin of safety part? It is how much? 4,000. It is actually 4,000. Why? Because for margin of safety, contribution is equal to profit, guys. Profit is equal to contribution, because for margin of safety, fixed cost will not be there. Okay. So we can also do like this. We can also analyze like this. See, 4,000 is the profit. For how much margin of safety? 40%. So can I tell for margin of safety contribution is also 4,000 only? Yes. So 4,000 is the contribution. I'm not talking about profit. 4,000 is the contribution for how much percentage of sales? 40%, which is nothing but margin of safety. How much is my total contribution? How much is my total contribution? You get 10,000. I repeat this. This is another way of analyzing, but same answer you get. 4,000 is actually the profit of the company. Okay, sir. So obviously profit you will earn from what? Margin of safety. So for margin of safety, can I tell profit is equal to contribution? Yes. So for margin of safety, profit is 4,000 means contribution will be how much? 4,000. Okay. What is the margin of safety percentage? 40%. Margin of safety percentage is 40%. So for 40% sales, we have made a contribution of 4,000. How much for 100%? 4,000 divided by 40%. Similar calculation we have done yet. Yeah. So here it might be confusing for you, because in this formula what we use is profit also in rupees and margin of safety also in rupees. But margin of safety is not available for us in rupees. So just be converted into percentage. Yeah. So you can analyze in any one of the better way which you guys feel comfortable. So the answer here is total contribution is how much? 10,000. 10,000. Okay. Let us go to the next question. From the following information, calculate the amount of profit. Sales is 16 lakh, fixed cost is 4 lakh, PV ratio is 30%. Okay, easy question. So 16 lakh into 30% you do. Straight away you get contribution, 4 lakh 80. Straight away you get contribution. From that deduct 4 lakh fixed cost, 80,000. So what is the amount of profit? 80,000. Straightforward question. Okay. Next, PV ratio of A Limited is 50% and margin of safety is 40%. What is the amount of break-even point? Amount they are asking. And net profit if the sales volume is 50 lakh. Actually, sales volume is not the correct word. They have to give it as value, because volume means quantity. Yeah, yes. PV ratio is given 50%, margin of safety 40%. What is the amount of break-even point and net profit if the sales volume is 50 lakh? That is nothing but sales value. Sales is 50 lakh. So contribution can we calculate? Yes. Fixed cost is not given. They have asked what? Break-even point and net profit. Yeah. Chalo guys. So margin of safety is how much? 40%. So can I tell break even sales is 60%? That is remaining part. Okay, sir. So what is your total sales? Total sales is 50 lakh. So break even sales will be 50 lakh into 60%. That's all. 50 lakh into 60%, which is 30 lakh. So break even sales is 30 lakh. Okay, sir. And what else they have asked? Net profit. Net profit if the sales volume is so much. Okay. Now, so let us come to the margin of safety part. How much is margin of safety, guys? Margin of safety is equal to 50 lakh into 40%. So 20 lakh. 20 lakh. How did I get? 50 into 40%. Okay, sir. Now into PV ratio you do. Into PV ratio you do. How much is that? 50%. So it comes to 10 lakh. What is this? Contribution. Contribution, which is equal to profit. So what is your profit? 10 lakh. Profit is how much? 10 lakh. Because for margin of safety, contribution is equal to profit because there won't be a fixed cost. So how much is profit, guys? 10 lakh, which is nothing but the margin of safety into PV ratio we have done. Margin of safety into PV ratio. So break even sales is 30 lakh and profit is 10 lakh as asked in the question. Okay. See all the different possibilities you have to think, all the cross calculations, everything with the given information, how to get what is the asked requirement. Okay, or what is asked in the question, how to get it with the required information, you have to analyze it. Chalo, 86th. If the total cost is 30,000 for the sales of 50,000 and 22,000 for the sales of 30,000, then the PV ratio is. So here we have to use this formula, that is change in cost. Yeah, change in profit divided by change in sales, guys. Change in profit divided by change in sales. Okay, what they have given? If total cost is 30,000, sales will be 50,000. So what is the profit? 20,000. So in period 1, the profit is 20,000. Agree? So what was the sales for it? 50,000. Okay, sir. Then second scenario. And 22,000 for the sales of 30,000. So 22,000 is the cost for the sales of how much? 30,000. So how much is the profit there? 8,000. So you have to consider like the data given for two different period. So what is the profit there? 30 minus 22, 8,000. For the sales of how much? 30,000. Okay. Into 100 you can do, which will give you a PV ratio. So 12,000 by 20,000. 12,000 by 20,000 into 100 you have to do it. Just into 100 you have to do. You will get 60%. You will get 60%. Hope it is clear for you. Yes. Next. Ind AS 33 deals with. I had mentioned in the class, you may expect a question on this. Please be careful, Anta. So number, Ind AS number, this is given at the end of the valuation chapter. Ind AS 33 talks about earnings per share, guys. Okay. Next. Which of the following is not a valuation approach? Which is not a valuation approach? Okay. So income approach, asset approach and market approach is an approach to value. Whereas expenditure approach is not there only. So that is the right answer. Yeah. Chalo. Next. A Limited has the following details. Return on equity, expected earnings per share, that is EPS, expected dividend per share. Whenever they tell expected, obviously it is at the end of the period, guys. Okay. Required rate of return. What is the expected growth rate and price per equity? Okay. What they have asked is with respect to valuation of equity, they have asked growth rate as well as equity price. So return on equity means what? R. Small r. Expected earnings per share means what? EPS 1. That is at the end of the year. Expected means at the end of the year. Okay. Expected dividend per share means what? D1. D1 or DPS 1. Required rate of return means what? K. It is K. Okay, sir. What is the expected growth rate and its price per equity? Growth rate is, what is the formula, guys? B into R. Retention ratio into R. Now what is retention ratio? Simple. Sir, out of my earnings, how much is retained? 5 is earned and 3 is paid, means how much is retained? 2 rupees. So retention ratio, or sorry, let me denote it by B. RPS by EPS into 100. Okay, RPS is how much? 5 minus dividend paid is 3. So 2 divided by 5 into 100. So 2 by 5. So 2 by 5. So it is 40%. You can also do like this. You can calculate dividend payout ratio. What is dividend payout ratio? Dividend payout ratio. DPS is how much? 3. EPS is how much? 5 into 100. How much you get? 60%. So what is retention ratio? Remaining 40%. You can do like that also. First you calculate dividend payout ratio. The remaining would be the retention ratio. Okay. So we have got retention ratio 40%. So 0.4 into. On that, what is the company earning? Return on equity. R is always denoting what? What company is able to earn. That is nothing but return on equity of 15%. So 0.15. So how much you get? 0.4 into 0.15. It is 0.06 or 6%. What is the growth rate? 6%, which is nothing but retention ratio into return on equity. Return on equity means how much the company is able to earn with that money. Because retention means what? Company is retaining it and reinvesting it. On that, how much company is able to earn. Okay. Next, what else they have asked? Price of the equity. So price of the equity, what do we use the formula? D1 divided by, as there is a growth, K minus G. D1 is 3 rupees. K minus G 0.1, required rate is 10. So K is 10 and growth rate is 0.06. So can I tell 3 by 0.04? So 3 by 0.04 is 75 rupees. So the price of the equity is 75 rupees. So what is the answer? 6% and 75 rupees. So please be careful. You can see 75 rupees is in 2 options, whereas 6% also is there in 2 options. So you have to make sure that you are getting both the answers correct. Just as soon as you get first answer, don't mark the answer, guys. Both has to be correct. Please be careful with it. Yeah. Let us go to the next question, 90th. Average profits, super profit and capital employed of Z Limited are 7,80,000, 2,40,000 and 45 lakh respectively. Normal rate of return is 12%. Okay, NRR. The value of goodwill on the basis of capitalization of super profit. The value of goodwill on the basis of capitalization of super profit. So capitalization of super profit, goodwill will be a what? Super profit by NRR, normal rate of return. What is super profit? In between item 240. So 2,40,000 divided by NRR is how much? 12%. Okay, 2,40,000 divided by 12% is 20 lakh. 20 lakh. 20 lakh is the answer. Sir, what about capital employed, average profit and all? It is irrelevant here. They would have given just to confuse you. So it is not relevant here for this question. Yeah. Yes. Under section 247 of Companies Act 2013, a registered valuer shall be, means for the purpose of valuation, a registered valuer shall be appointed by whom? Board of Directors. Board of Directors of the company. Okay. Next, which of the following methods of valuation of shares is suitable for ascertaining the market value of equity shares or shares which are quoted in the recognized stock exchange? So to calculate the value of the share which is quoted in the recognized stock exchange, which is the best method? Based on rate of earnings method? No. Based on rate of dividend? No. Because even if the shares are not quoted also, we can still use these methods. Whereas based on price earning method? Yes. Because what is price earning method? P, where price depends on the market. Okay, price is nothing but market price, MPS, that is market price per share. How to calculate PE, guys? Market price per share divided by earnings per share. And what is the market price per share? At what price it is quoted in the market. So last one is based on price dividend ratio method. That is also not there. There is nothing called price dividend ratio method. So the answer is based on price earning ratio method. Yeah. Yes. Next. With reference to Ind AS 102, what does SBP stands for? Very simple question. SBP stands for what? Share based payment. They have given us some similar name, sum based payment, share based proportion, share based profit and all. So please be careful. It is share based payment. Okay, let us go to 94th. Beta of a market portfolio is always equal to 1. It is always equal to 1. Chalo. Next, the relationship between the risk and return established by a security market line is called as what? CAPM, which is nothing but capital asset pricing model. Okay. Next, coming to 96th. Under the arbitrage pricing theory, it is assumed that the markets are frictionless because of the fact that there are no transaction cost, there is no taxes, infinite number of securities are available. What is the answer? All of the above. It is all of the above. Okay. Next, coming to section question number 97. An investor expects a dividend of expect means with respect to future 8 rupees per share for each of the 5 years. Means for each year it is 8 rupees for 5 years. And a selling price of 120 at the end of 5th year. So they are expecting that the selling price will be 120 at the end of 5th year. If his required rate of return is 10%, which is nothing but K, or we also call it as a discounting rate, the share is a good buy at what price? Now they are asking at what price it is good buy. So we have to calculate intrinsic value of the share. How? By using the present value factor. So they have given present value factor of annuity at 10% for 5 years. What is this 10 and 5 is nothing but at 10% for 5 years is 3.791. It is nothing but 10% whatever present value factor we get, they have just added it for 5 years. Okay, we have learned it using M plus how we can add it and they have straight away given it 3.791. Please take it straight away. So we need not scratch our head how to get it. And what is the present value factor at 10% for 5th year? For 5th year, it is 0.621. So how come it is different? This is annuity factor, whereas this is only present value factor. Please be careful. So what should I do? Dividend I am receiving at the end of every year. So I have to multiply it with what? Present value annuity factor. Why? Because the cash flows are equal. When cash flows are equal, can we use annuity factor? Yes. What is the annuity factor? 3.791. This is nothing but the total of present value factor at 10% for 5 years, guys. Yeah, which we can do it using the calculator also, using M plus. So this is the present value of dividend part. Plus, we are also selling the shares at the end of 5th year. At the end of 5th year. So what is the present value factor for 5th year? It is 0.621. It is given. You can also check it in Calc. Okay, it is directly given here. In the exam, you need not worry, but just cross verify it. How to get it, sir? 1 divided by 1.10 because the discounting rate is 10%. So you will get 0.909. This is for first year. Press is equal to. You will get it for second year. Press is equal to. You get it for third year. Press is equal to. You get it for 4th year, which is 0.683. Press one more is equal to, which is 0.6209. So you will round it off to 621 as we are taking 3 decimals. Clear? And if you want to calculate the annuity factor, you have to do M plus. You have to total the present value factor for all the 5 years. Chalo, calculate the value. 8 into 3.791, which is the present value of the dividend plus present value of sale value. I would be selling the shares at the end of the 5th year, where I am expecting that the price would be 120 rupees. 328. So what is the price you get? 104.848. What do we call this as? Intrinsic value or present value. So what is the value of the share, guys? 104.848. So in the market, if it is available at less than this price, we buy it. If not, we don't buy it. Yeah. So this is the actual value, theoretical value or intrinsic value, we call it as, of the share. In the market, if it is available at lower than this, we buy it. If not, what? Assume in the market price of the share is 110. If I am holding this share, then I will sell it. Sir, what if I am thinking to buy it? Don't buy it. Why? Because it is overpriced in the market. Yeah. So question is, at what price will you buy now? So you can observe here, they have given 100, 108, 110, 115. Whatever the remaining three prices they have given is more than whatever prices we have calculated. So obviously we will not purchase at more than the intrinsic value. So if in the market, if the market price is 100 rupees for the share, then I may buy it. Clear? So if it is less than 104, even if it is equal to 104 also is fine, but not more than that. But not more than that, because it will be a loss for the purchaser. Okay. 98. Among all measures of business value, the dash of business is likely to be least value, which is liquidation value. Because at the time of liquidation, the company will sell all the assets and they pay all the liabilities. So normally what price they get at the time of sale of the assets at the time of liquidation or on liquidation is very less when compared to market value, replacement value and book value and all. Okay. Chalo, next 99th question. Current market rate of X Limited equity share is 80 rupees per share. So what do we call it as? P0, current market price. The company is expected to pay a dividend of 4 rupees per share. Expected means what? E1, EPS 1. Sorry, D1. Dividend per share is 4 rupees. With the annual growth of how much? G, 10%. In this case, the rate of return would be, which formula do we use, guys? Growth model. So D1 divided by K minus G. So what have they asked? Rate of return, which is nothing but K. Let us calculate it. P0 is 80 rupees. They have given it. D1, that is dividend at the end of the year. See, if by chance, if they have given current dividend, we have to calculate the dividend at the end of the year. Expected, they have asked. They have given. So that means it is D1 only, which is 4 rupees divided by K is not known. And G is 0.10. So replace the value. 4 by 80 you do. So other side you take K minus 0.10. So 4 by 80, you will get 0.05. Bring 0.10 to the other side. So add up 0.05 plus 0.10. So how much it will be? 0.15. 0.15 or 15%. K is how much? 15%. Clear, guys? Yes. Chalo, the last question. As per section 54 of Companies Act 113, a company can issue sweat equity shares of a class of shares. Sweat equity shares are allotted to whom? The employees of the company. Can issue sweat equity shares of a class of shares already issued only after dash from the date of commencement of the business. So they can issue from what? Within 1 year. That is from the date of commencement of the business. That is after 1 year only, not within, actually it is after. So assume you have commenced your business on 1st April 20. Only after 1 year you can issue the same class of shares. Yeah. Yes. So it is actually more related to company law question, but still it is asked here. Fine. No way, because even company law is also part of your syllabus. So this is all about the questions which were asked in June 22 exams, guys. I hope easily you can score above 35 in this question paper. If it is asked for same questions, if it is asked for you in your respective attempt, you can aramse score 35 plus, guys. Clear? So also the suggested answers also is given at the end. You can just go through it. I already marked it. Here I have just already highlighted the answers. So I have explained the answer for each and every question. Hope it was helpful for your preparation, guys. All the best. Study well. Thank you.